Hello, everyone, and welcome to The Buck Stops Here. I'm Catherine Murray. Well, as we enter 2023, there's still a lot of volatility and a lot of uncertainty in the market and a real tug of war between the bulls and the bears. So I want to continue to provide perspective in terms of where we might be for 2023 and really how to set yourself up. And my next guest, his key goal is always to make money in the markets. Let me bring in JC Parets. We've been talking with each other for so many years now. He's the CEO and Chief Market Strategist at allstarcharts.com. JC, great to be with you. Thanks so much for joining us.
Listen, love this. We have been doing this for years and different cycles too. So there's always something different we're talking about. As you know, we're asset class agnostic. It doesn't matter if we're buying gold or shorting Microsoft or, it's just letters and math, Catherine.
Yeah, it's just letters and math. It's a little bit more complicated than that, I think.
It can be. It can be. It doesn't have to be.
Fair point. And for our viewers to understand, your background and what you do is technical analysis. You don't really care about the fundamentals. And that's also why you say you're agnostic in terms of various asset classes or what have you.
Yeah, listen, there's no question that the fundamentals are what drives prices. It's just that a lot of investors think that the market cares about their fundamental analysis. It's like, no. It's not your opinion of the fundamentals that matters. It's the market's opinion of the fundamentals that matters. So because we know that, we just follow the market itself, right? As opposed to people's opinions on the market that may or may not be true, but we know that the market's opinion is true. So we're just going to follow that.
Right.
So that's what that means. So we care about the behavior of asset classes and the price changes and momentum and relative strength and rotation and things of that nature versus how many shoes did Nike sell?
Right, exactly. And the market doesn't lie, right? I mean, you see
do they
even
even
the
still
price.
sell shoes? I don't even know.
Yes, they do. All right, well, Jason, let me just get your first take because everyone's trying to figure out really where the big picture market's going, and we're going to drill down into certain sectors and stocks that you like, et cetera. But big picture right now, what's the S&P looking like to you?
Listen, the S&P 500 is just a mess, right? And the reason it's a mess is because it has such a high weighting to large cap growth, right? I mean, the technology is like still 25% or something ridiculous when you add the communications, which is Facebook and Google, when you add consumer discretionaries, which is Amazon and Tesla. What people fail to remember is that Amazon and Tesla are not tech stocks. Amazon and Tesla are in the consumer discretionary space. When you look at Facebook and Google, again, not tech stocks. Those are in the communications index, which has been the worst index over the last couple of years, by the way. And it's half the index is those two companies. So that's not even the technology that represents a quarter of the S&P 500. Now add all that other stuff. Now you're in the 40s. Almost half the index is these mega cap growth stocks. Remember a few years ago, people were like, oh, JC, it's only 5 stocks driving the market. Well, remember those kind of good times? This is the opposite of that. Everything else is working, right? So in my opinion, in my estimation, we've been in a bull market for 7 months. Stock market bottomed in June the 16th. That was the peak in the new 52-week lows list. That is the worst things were, right? And then since then, things have gotten progressively better. You're not seeing that in the mega cap indexes per se because of all that growth exposure. But look at something like the Dow Jones Industrial Average, which is 7-8% from new all-time highs.
Yeah, people don't see that or feel it. That's for sure. But you're right. It's because of the extra weighting of these large cap or mega cap companies. But that's interesting. You actually think that we're in a bull market from a technical perspective.
There's no question. Catherine, listen, we're not rookies here. We've seen enough of these cycles. You and I both, right? We know.
Yeah.
What happens in bull markets? What are the things that happen? More stocks are going up than going down. More stocks are making new highs. Fewer stocks are making new lows. You get sector rotation. If it's not one sector working this week, it's a different one taking over that leadership for a week or two or even a month or even a quarter, right? The leadership regime changes. Positive sector rotation, breadth expansion. More sectors are going up. More industries are going up. More countries around the world are going up. Fewer countries are going down. True. Fewer countries are making new lows. Call me crazy, but you tell me, is that what bull markets are like? Am I wrong?
Well, I guess the one thing I hear
they're not a bull market,
and I don't know. It doesn't feel like it, but I hear exactly what you're saying. If you actually kind of just, look at the various sectors, but
People want to get all
I
fancy with their
wonder.
algorithms into this, into that, or you could just count. Are more of them going up or are more of them going down? Is it easier to make money from the long
Okay.
side? Is it hard, is it harder to make money from the long side? Are you being rewarded
We'll take a
for
quick
putting
break.
money to work from the long side, or are you being rewarded for your shorts? Money goes to where it's treated best. And our longs have been doing great,
Yeah.
and our shorts have not.
We are back with JC Parets. JC, I want to get your take then in terms of what is working, what's been working for you, and what's not working in the market.
Yeah. When you look at a big pivot that occurred in the second half of last year is the dollar peaking. We could date that back to September the 26th is when the dollar put in its peak internally. That was when the British pound bottomed. Euro bottomed 2 days later. A couple weeks later, yen bottomed, emerging market currencies bottomed, and they've all been ripping ever since, and the dollar's been under a lot of pressure. So if you anchor back to that moment in time and you put a performance chart of the best performing assets and types of stocks or types of assets anyway since then, what's been the best? It's been precious metals, it's been non-US stocks. Precious metals by a lot more, silver really outperforming in that environment. Those are the things that are
Mm-hmm.
working. And think about the composition of international equities. You don't have that tech exposure, right? A lot less growth around the world in all of those countries. The UK has 0% growth. Excuse me, 0%
Right.
technology in there. So very, very little or no growth. And guess what? UK is pushing up against new all-time highs. The I shouldn't say irresponsible, but the obnoxious amount of growth exposure in US equities was a great thing for a long time. These days, it's a headwind, right? With higher rates that impacts growth stocks tremendously, and you're seeing that underperformance. So, and by the way, it's not just like hasn't been working lately. It hasn't been working for a while, right? When the market
Yeah.
peaked initially was February of 2021. That was almost 2 years ago.
Do you think, though, that we're going to continue in 2023 to see the underperformance of growth stocks? Or have they also bottomed? I was listening to a call yesterday from one of the big banks. Have they bottomed and they're already reflecting the concerns within the economy? Again, I know you're not fundamental, but you're technical. But are you seeing any kind of momentum or technical strength in some of the growthier areas of the market yet?
Yeah, no doubt. Facebook's up 50% off the lows. You're seeing massive rallies, anything crypto related, starting off the year with a bang. So a lot of things
Yeah.
in terms of mean reversion taking place in growth. And I think it probably has legs, especially, considering they're the only ones that haven't been working. When you look at a lot of the other areas, when you equally weight the market, like consumer discretionary, for example, if you equally weight consumer discretionary, it's the best performing sector since the June lows, right? It's up 20% on an equally weighted basis. So you're taking out that Amazon and Tesla effect. Tesla's 14, 15% of consumer discretionary. Is that warranted? Amazon's a quarter of consumer discretionary. So that doesn't tell the whole story. It tells the story that large cap growth stocks have been getting hammered. That's the story. So if you eliminate that and you equally weight discretionary, it's the best performer. That's not that type of stuff doesn't happen in bear markets. Industrials breaking out to new all-time highs. Look at aerospace and defense, truckers, railroads. A lot of strength under the surface. European banks were up 26% in the fourth quarter. Catherine, we've seen this story
Wow.
before. When the world's coming to an end, European banks are front and center, leading the march to zero, not breaking out to new highs and leading financials globally higher. Come on.
Okay, so let me ask you about financials because I think a lot of our viewers own banks, kind of just stick with it, steady Eddie. How are they looking?
I think it depends on where you look. The regional banks have really struggled for the most part, particularly on a relative basis. It's really been the insurance stocks. Insurance stocks have absolutely been crushing it. Look at things like, Chubb and some of the bigger names. Look at IAK, which is the insurance ETF. Look at things like Aflac
Okay.
and MetLife and some of those just absolutely crushing it. Look at uh, the healthcare plans and providers, UNH and Cigna and things like that. Like those continue to do really, really well. So I don't know if it's like the insurance stocks and those like mega care, healthcare plans. I don't know if they're tied together, but a lot of strength in both of those areas. The reinsurers, Marsh McLennan, Aon,
Hmm.
Willis, just continuing to push up against new highs. So that's an interesting segment of insurance, property and casualty,
Yep.
obviously. So within financials, and then the broker dealers also leading the way there, versus things like um, uh,
Mm.
uh, regional banks, for example. And then I'll finish with
Yeah.
Berkshire Hathaway. Berkshire Hathaway is
Okay.
the largest weighting in the S&P Financials Index. Massive outperformer. Uncle Warren just keeps winning.
Right. I was looking at a financial ETF though yesterday, and it has been a bit of an underperformer. Maybe not an underperformer, but it hasn't been that strong. But JC, we're gonna take a quick break, and we'll pick that up on the other side of this
Sure.
quick commercial. JC, I want to talk a little bit about the financials. As I said, I think a lot of our viewers own financials, and I was looking at them yesterday. I own an ETF, and I wasn't that thrilled with the performance. And you say what?
Well, I'll say look at it on a relative basis because it's making new 52-week highs. So relative to the rest of the market, it's doing great. But when you compare the market, you're really comparing financials to things like technology and heavy weighting in the S&P 500 when you use that as a denominator. So on a relative basis, it's going great. Number one. Number two, it's more specifically where within financials, right? Regional banks have been struggling. Some of these money center banks have been struggling. The real strength has been insurance, which is a key component of quote unquote financials. Berkshire Hathaway, also a tremendous outperformer, one of the biggest winners of 2022. Uncle Warren just keeps on winning. I would look at that. I think last I checked, Berkshire Hathaway was 15% of the
Yes.
financials index, the S&P Financials Index.
Yeah.
It's a big weighting. It's doing great.
It's very, very big weight. But JC, you also bring up the point, and you said that you were talking about it, I guess, last summer, and nobody cared, which are the financials and the price they're at now or then as compared to 2007. Why is that relevant?
Yeah, think about this. When you go back and you look at the most important prices in stock market history, you know, we talk about a time that has come to be known as the Great Financial Crisis. Like talk about dramatic. But I was there, I
Right.
traded it. It was crazy. It was nuts, right? So we'll give it that. Okay, fine. Think about how important the peak in financials before the Great Financial Crisis. Think about how important those prices are. It's kind of like the March 2000 highs in the Nasdaq. The tech bubble peak. Like those are very important prices in stock market history. Since then, technology
Why?
has exceeded those highs. Right? You feel me on that, Catherine?
Well, yeah, but explain why those prices are so important. Because what people will remember is that the prices crashed after those peaks,
Right.
just as whether it's the financials in 2007 or the tech in 2000. So why is that? How's that relevant to today?
Because remember, the markets are driven by supply and demand. Obviously, there are reasons behind why there's more demand than supply, and investors have their reasoning. They're not all the same reasons. Investors are doing things for different mandates, right? So let's remember that. But one thing we know for certain is that prices fall when there is more supply than demand for the stock or whatever it is that we're talking about, gold, treasury bonds, whatever. If there's more supply of them and there's less people willing to buy them, price is going to fall. People are like, wow, JC, for every buyer, there's a seller, right? Because people are like, oh, more sellers than buyers. For every buyer, there's a seller. Yes. There just aren't an equivalent amount of buyers and sellers at every price, which is why prices
Right.
move, right? Okay, so then what do we know about the 2000 dot-com bubble highs? We know for a fact, not an opinion, that there was more supply for those types of stocks at those prices than there was demand. So much so that there was so much more supply than demand that prices completely collapsed. That's how much supply was out there relative to demand. Ultimately, when technology broke out above those levels, and around 2014 to 2016, depending on what index you're describing, but around that period is when technology finally was able to exceed those March of 2000 highs. And then we went on to have an epic multi-year huge rally led by technology, as we all know, that ultimately came to an end.
Right.
But when we exceeded those former highs, that was a big deal. That's demand finally absorbing all of that supply that crashed the markets 15 years prior. When you talk about financials, it's
Well,
the
and
same thing.
that's the issue though too, right? I mean, that is always the issue when you see those major crashes. It's amazing how long it takes to kind of recoup your losses, and
For
that's why,
sure.
understanding your own personal time horizon is really key and critical in investing, in addition to the price, et cetera. But how does this all relate to financials today?
Well, to your point, the bigger the collapse, the longer the need for repair, right? Just go back and study every crash. It takes a while for it to get going again. And when it does, it's a huge breakout. Well, in financials, we can talk about the exact same thing, an overwhelming amount of supply for those bank stocks in 2007, in fall 2007, relative to demand for them, so much so that the financials all crashed, right? As we know, as the great financial crisis. So it took, took about 14 years for financials ultimately to exceed those highs, right? Just like it took the NASDAQ about the same amount of time, really. And when we were able to
When did
finally
you?
exceed those highs in
Yeah. When did you
2021,
see that?
financials finally broke out above
Okay.
those '07 highs. That eventually was a great rally. We have now retested those, while stocks have sold off over the last year, financials have retested that breakout level from those 2007 highs. Very, very important. By the way, retested it successfully.
All right, we are back with JC Parets. So, JC, I want to get your take on the energy sector and oil. What's your view here? What is it looking like from a technical perspective?
I got to tell you, Catherine, I continue to be very, very, very impressed with just how resilient energy stocks have been despite the correction in crude oil. They are crushing
Yeah.
it. You would have expected more supply than demand for those equities with such a correction in crude oil. And we really haven't seen it. Quite the opposite. And speaking of Warren Buffett and Berkshire Hathaway, they've been very aggressive buyers of energy stocks. They continue to file. They're insiders at this point. Warren Buffett owns 30% Occidental Petroleum. They're loading the boat. You think he's going to sell now? No, he just got approved to buy up to 50%. You don't think he's going to take advantage of that? Come on, we know Warren.
Okay. So, but you're saying though that the energy stocks, they have been resilient. What is oil looking like? I don't know if you're doing the technical analysis on the actual price of crude, but do you think that, because there's a lot of people who missed the boat, and a lot of people are now just getting into it. It's still a very small percentage of the overall index, but it's creeping up, and that forces buyers if you hug the index.
Crude oil's messy. Above 70,
Okay.
76, it's hard to be bearish of crude oil. We'd really have to be breaking down into the 60s to really press those shorts. I'm just not seeing it. I think if you want to be in energy, I think you're better off in the equities than you are in the commodity. The market has proven that. So think about it. If the energy stocks can't go down when crude oil is going down, how are energy stocks doing when crude oil is going up?
Yeah, fair point. I'm glad you said that. I'm very long oil. Have been since I think 2018. So we still need it. What can I say?
There's
JC,
a time and a place for everything.
Yes, there is. There is. I want to get your take as well. Prior to filming, you mentioned a very interesting contrarian indicator you sometimes use, and it's a
Well, we were
person.
talking about my grandmother. My grandmother, she represents an average, your typical person who doesn't follow the market every day, but understands that the market exists, understand that they have exposure to the market one way or another through some retirement account or something maybe even more detailed than that. And she reads the newspaper and she kind of pays attention to a little bit about what's going on, but she's not like in the weeds every day like us. Obviously, she's a 92-year-old, woman from Cuba, just trying to figure out what's for dinner, right? But it's in her peripherals. So when she comes to me with something specific, she's not the first to hear about things, right? She's probably closer to the end. She's probably one of the last people to hear about the types of trends that we talk about here every single day. So when she approaches me, which is few and far between, about a specific trend, there's a very high likelihood, and we have a very high hit rate that that trend has exhausted itself.
So she's your contrarian indicator.
She's
What was
one
an
of the best
example of
contrarian
that?
indicators in the business. I'm telling you, when Abuela comes calling, one day in 2015, March 2015, I go to her house and she usually gives me a hug. She's like 4'0". She gives me a hug. Oh, gives me a kiss, tells me how, I'm too skinny or I'm too heavy or I'm too white or too dark. Obviously something's wrong with me every time she sees me, but whatever. This time she opens the door and then she runs to the kitchen and she comes out with the Miami Herald in Spanish, which is El Nuevo Herald. And there's a cover in the front cover. It's the Euro sign, right? Like sinking in the ocean. And she's like, oh, this euro, huh? So I immediately call my friend Phil, and I'm like, Phil, Abuela's bearish to euro. I think it's time to start fading dollars ASAP and start buying euro. That week was the bottom in the euro, Catherine. That week. And the euro absolutely ripped from there for years to come. It was classic. And then in 2017, late 2017, my grandmother's like in Spanish. She's like, oh, what's up with this new currency? I was like, first of all, it ain't new. Second of all, I'm selling all of it. So the Wall Street Journal calls me. He's like, oh, why are you selling Bitcoin? And I'm like, oh, because my grandmother, is asking about this new currency. So it's a little long in the tooth. And they published that.
In the Wall Street Journal.
Yeah.
That's hysterical.
But I can't tell her because then I lose the data if I tell her that she's a contrarian indicator. First of all, I don't know that she necessarily understands what that means, but you can't tell her. It's too good a data.
It's our secret. It's our secret, and everybody watching. All right, JC, thanks so much, and thanks everybody for watching. See you next time.
Got it.